Guys, this is alarming. Redfin recently released a housing report saying that 40% of home sellers are dropping their prices. So in this video, we're going to dive and dissect which areas and the reason why. Sellers are adjusting their expectations as they realize many buyers are no longer able to afford the type of home they could have before mortgage rates shot up. Due to simple economics, a lot of us knew this was going to happen. If you go on Zillow and Redfin, you see a lot of price drops just around the board. I get so many notifications from Redfin alone. This is most likely the same reason why investors' home purchases have slumped to 17%. Aladdin is probably telling these investment firms that as of right now, this isn't the best course of action. An increasing share of home sellers are lowering the asking price as rapidly rising mortgage rates cut into buyers' budget and home buying settlement drop. Price drops are especially common in mid-sized metros in the West, particularly in Utah, many of which had outsized price growth during the pandemic because there were hotspots for people moving in and out of the country. Now, I want to go into depth on this mortgage rates cutting into buyers' budget. Mortgage rates have went up to 5.81%, the highest rate since November of 2008. Now, this is where it gets even more insane. On Thursday, the Mortgage Bankers Association reported that the national median mortgage payment was $1,897 in May, up from $1,889 in April and $1,736 in March. Payments have increased 513 or 37.1% in the first 5 months of the year. And if you combine this with inflation, you can most definitely see why 78% of people say it's a bad time to buy a house. Now, they also said price drops are especially common in mid-sized metro in the West. The reason for this is during the mass migration, the bigger cities became way too expensive, so they looked towards the mid-sized metros. But in turn, it just raised the market because of the sudden influx of people. According to Redfin chief economist Daryl Fairweather, there are two kinds of sellers in today's market: those who already know the market has cooled and those who are learning about the cooling market as they go through the selling process. The former wants to sell quickly before the market slows further, and they're willing to price slightly below comparable homes in their neighborhood right away, and the latter may have to drop their price if their home doesn't attract buyers within a few weeks. As more sellers come to terms with the slowing market, fewer homes will have price drops. This statement makes a lot of sense. There are people who fear a crash is coming and they are trying to get the best bang for their buck before it's too late. As the market gets more adjusted to the new home prices, home price drops will slow down to the new status quo. Many buyers are backing out of the market and even backing out of deals. And some sellers are responding by dropping their prices. Some buyers are no longer able to afford the home they want because mortgage rates have increased so much. There aren't nearly as many people moving into the Boise area now that prices have gone through the roof. Ironically, a lot of Boise newcomers are now leaving because the quiet, slow-paced lifestyle that drew them here doesn't exist the same way it did before so many people moved in. Those people are cashing in on their equity to move to more affordable areas, mainly in the Midwest, because they can get even more for their money. In some cases, they even pay all cash. Now, for some people, moving was kind of a short-term investment. That's kind of why a lot of people are moving from these mid-sized cities, because they realize that this doesn't really accommodate my lifestyle or became exactly what I moved away from. But the thing is, a lot of people had this same idea of moving to mid-sized cities. Now, they have a lot of equity built up in their homes, and now they are moving elsewhere. Now, I want to show you guys something that is really alarming. Demand for adjustable rate mortgages surge as interest rates make biggest jump in 13 years. Mortgage applications to purchase a home rose 8% last week compared with the previous week, bolstered in part by demand for adjustable rate mortgages, according to the Mortgage Bankers Association. Now, guys, me personally, I think an ARM mortgage is really risky. I know they are being better written, but the thing is, I'd rather go to the safer option. I'd rather go with a fixed interest rate instead of a adjustable rate mortgage that can pretty much explode out of anywhere, and there's a higher chance of me being screwed. That's why I wouldn't do it. But I would only get it if you guys absolutely know what you're doing. I am going to show you guys even more evidence that this housing market is basically waiting to get sunk. Now, Jamie Dimon, the CEO of JP Morgan, even straight out said a recession is coming. This must explain why JP Morgan mortgage business lays off and reassigned hundreds of employees as rates climb. Now, let's look at the yield on the U.S. Treasury note. The yield has basically spiked up to 3.1%. A few weeks ago, it spiked up to nearly 3.5%. I wanted to show you guys this because one, this is loosely based off mortgage rates, and two, this is basically a condition of the whole market in general. This article from Market Watch will pretty much shake you to your core. The savings and income needed to qualify for a home loan have skyrocketed. 5 ways the housing market left buyers in the dust, and it's not over yet. With median home prices zooming past $400,000, owning a home has become a lot less unaffordable for the average prospective buyer. The national median listing price for active listings was $447,000 in May 2022, up 17.6% compared to last year, and an increase of 35.4% versus May 2020, according to Realtor.com. To afford a median priced home, a buyer would have to put down more than 38% of their income. Now, I don't know if they're talking about the mortgage down payment or the monthly mortgage payments, but I could be wrong, but we make mistakes. Now, this goes way beyond the 28% rule. If you guys don't know what the 28% rule is, here it is. It states that you should spend 28% or less of your monthly gross income on your mortgage payment. Now, 38% of your income to your mortgage nowadays is going to be tough. The wage growth right now is laughable, and the personal savings rate is at the lowest it's ever been in over a decade. Now I want to show you some interesting graphical data. Home prices and apartment rents soar. Now guys, let's look into this graph. Now guys, remember I tell you guys, I said you guys should rent. Well look, home prices have appreciated more than apartment rents, which honestly I didn't know the gap was that big. This is pretty insane to me, but I bet you guys Miami, Florida is probably leading the way in terms of apartment rent. Anyways, back to the graph. Now apartment rent and home prices have usually been hand to hand. As you guys can see from 2016, they were very intersected. 2019, okay, home prices started to go a little bit up, but they were still relative to apartment rent. And then both apartment rent and home prices skyrocketed, but home prices left apartment rents basically in the dust. Now, this is also going to be the last segment of information I show you guys, but this is also going to be pretty insane as well. Now, guys, we all know the mortgage payments for median price homes has risen by over $600. In its effort to combat rising inflation, the Federal Reserve hiked interest rates, which pushed mortgage rates up sharply. The average rate on 30-year fixed rate mortgage has gone past 6%. With prices continuing to rise along with interest rates, the savings and income needed to qualify for a home loan have skyrocketed, raising financial hurdles for first-time and middle-income buyers. Now guys, the demographic that gets the most damage from this is millennials. They're arriving on the market in possibly the worst situation possible. Majority of them are in debt, rising inflation, and then you have to deal with rising mortgage rates. It's an expensive proposition to own a home under the conditions today. If you're a first-time home buyer who's putting down a 7% down payment on a median price home, that would have amounted to $27,500 in 2022, the report said. This amount alone would rule out 92% of renters whose median savings are just $1,500, the authors added. Now guys, this is going to be the end of the video. Make sure you guys like, comment, subscribe. We're on the road to 3,000 subscribers.